Hey, what's going on, everybody? I'm Duck, and I'm here to teach you what they didn't teach you in K through 12. Honestly, this past week was the craziest week that I've ever experienced in crypto so far. Obviously, the stock market has continued to poop itself, and so has crypto, and we're all sitting, on our hands, just like wondering when's the right time to enter the marketplace. How can we profit off of this opportunity? And like, how do you make sense of all of the like crazy news coming out around you, right? And so, like, this past week, you know, Mim, Wonderland, uh, Daniele, all of these guys were center stage. They were the main focus. Um, there were a lot of things that happened this week, but I think that it's important to go over this first. Uh, right here, Sifu, he was doxxed. Apparently, he used to own some Canadian exchange that like rugged all of its customers. He stole like over $160 million from them, and nobody knew about it. And he was controlling the Wonderland time treasury. So that is obviously super sketchy and shady. And so they kicked him out as they should. But now it seems like time is basically going to be sold off, like taken apart and just not used ever again. And uh and this Twitter thread kind of sums it up really well by Squirrel Crypto. He's a like a dev who works with Daniele, and I think it's really important to understand like the type of things that he's saying, because obviously, you know I think that there's a lot of like good in these developers. They want to see Web3 survive, and they want to do what's right for like the customers, since they are also customers of the protocol most likely. And they want to see their projects like win and survive and thrive. And so, obviously there's always going to be some bad actors, but at the end of the day, I think that we need to like look at the bigger picture and understand like what it is that's actually going on here. We are having the decentralization of finance, putting the power into the people's hands, and that takes a lot, especially when we're doing it on like a super innovative timeline and structure. So things move fast, and for that reason, there's so much more volatility and like so many unexpected things that could happen. So this guy being doxxed was a really big deal, and you can read more about it. I don't want to go too deep into it because I think there's so much being covered about it, but I do want to get into some of the ramifications of it, which was spell. So like Abracadabra is really fundamental, which is a DeFi platform. It's very fundamental in providing loans to people, asset-backed loans, and them receiving MIM, which is magic internet money. And so you can do a lot of different yield strategies with that, especially stable coin yields. And one of the big ones is with Anchor. Okay, now let me try and find this. This is a great article right here that basically sums everything up. So like the MIM stablecoin, yeah, it depegged a little bit, but it did come back up to $1 fairly quickly, which was really awesome to see. And so Luna has been selling off. And why is this? Is because there's a degen box strategy on Abracadabra where people put their UST in there, and the fact of the matter is that Luna literally appreciates in value when you borrow UST, because you have to burn Luna to be able to provide UST. And so they were cycling this method for the 20% return on Anchor, and a lot of people had a lot of UST, and that is what basically made the Luna price like skyrocket. Not like just specifically that, the attention around it, everything, but that was a major contributor to that. And so right now we're seeing Luna price tank. Um, yeah, it's doesn't look great, right? But honestly, I think that this is great technology, and I'm extremely confident in Luna. But back to the news, right? So like, what's happening? A lot of people are withdrawing from MIM, and therefore selling off their UST, getting out of Luna, taking their profits, and running for the hills, right? Uh, so like, of course, there's speculation to this, and there's like tons of reason to question whether or not like this invalidates like the safety of crypto and stuff. Like, do you really want to hold your funds somewhere where stuff like this could happen? And I think that ultimately the question is like, that's I mean, the answer to the question is that's why we do research, you know? You have to be prepared for all types of scenarios. And like, the fact of the matter is that like, as I'm making this video right now, we're experiencing a drop, right? And I'm not going crazy. We've already been through this like time and time again, and you do certainly get more like comfortable with it. Obviously, it's not comfy seeing your like portfolio shrink in size, but you have to understand how to play this. It's all a game, and it's very important to do your research and get ahead of things. So like, my whole position is, obviously I'm continuing to buy into like things that I believe in the long run. So this is a perfect opportunity for me to get into Luna, right? Not financial advice, but that's just what's on my mind, right? Another huge thing that happened over the past week was the Federal Reserve meeting. And it's important to go over this because, economics is what drives like capitalism. And to be able to understand why like the financial markets are reacting to news and like what's happening in the world, you have to understand economics and the economy. And the people who basically run the economy for the world essentially is the United States Federal Reserve, because they control the money printing of the U.S. dollar, which is the denomination of many world currencies. So this is the press release that I showed you. But these are the notes that I made from it, and these are just some like it's not high level, they're detailed notes. But like, I think that it'll be good to go through this and like just explain to you my thought process with what it is that I think the Fed is trying to convey to us. So they said that economic activity and unemployment numbers continue to improve, which is good. So that means that the economy is growing. We're on an upward trajectory. Supply and demand imbalances related to the pandemic and the reopening of the economy have continued to contribute to elevated levels of inflation. So inflation comes from economic growth, which is a good thing, okay? Over time, we want to see inflation, and that's why the Federal Reserve aims for a 2% inflation target. And crazy inflation can indicate that we have an overheated economy, which is also indicated by extremely high levels of employment. Because think about it, if like everybody's getting a job who maybe doesn't even really qualify for that job, then there might be like worries of, not necessarily overemployment, but are we doing a little bit too much? And so there's this like continuous ebb and flow between unemployment and like lower levels of unemployment, which would be high employment, and higher levels of unemployment. And that kind of like keeps GDP increasing, right? We can control inflation, which is the big thing right now. This is what everybody's talking about. How is the Federal Reserve going to control inflation? By doing two things. One, by raising interest rates, and two, by stopping the purchase of assets for the federal balance sheet. Okay, so right now, the Federal Reserve plans on keeping the Fed funds rate, which is the risk-free rate, at 0 to 0.25%. Right now, it's at like 0.15%. Soon, they want to raise the target range for the federal funds rate due to the high labor participation and inflation that we are experiencing in the economy right now. Okay, that makes sense. They are also going to continue to reduce the monthly pace of net asset purchases and bring them to an end in early March. Okay, so like, they're literally telling you what they're going to do, right? Everybody's so concerned about like predicting the future, which we can't, but we can take the information that the guys who control this are literally handing us. So like we know what they're going to do. This is probably going to continue to send fear into investors and into the marketplace, is like people take money out of assets perhaps to like live regularly because the prices of things continue to go up. And then like if interest rates go up, then it's going to be more expensive to get money by borrowing. So like the catalysts are here to see things continue to somehow get worse, unless we see that financial conditions improve without the need for accommodation, right? So right now they're improving due to accommodation. We want them to improve without the need for accommodation, and we see that when we see pandemic scares going down and supply chain constraints improve. Because right now, COVID has made things very impossible for stores and companies and businesses to get like their product. Not only to get stuff to make their products, but to get their products out. Okay? So, as I said, we're seeing some red on Bitcoin right now. Honestly, nothing new, right? We've been in red since November 21st. And look at this. This is playing out pretty beautifully. Right now, Bitcoin is like testing the 786. It broke the 786 and looks like it's getting rejected to the 786. So I would expect it, obviously, to, probably come down here. But I don't think it's going to, like, go for much further below 30,000. I mean, this is just like what you have to keep an eye out. And the price swings are pretty big, right? Same story for near. We're still stacking up down here at the 786. Phantom, same story as before. And Terra Luna. We're pooping. We're pooping the bed. This is just a big poop just coming down the hill. And, it's times like these where you really have to make your strategy. And this is something that I'm going to begin doing and just, give you guys the link to so that you can see what it is that I'm thinking. Not financial advice, right? But I'm going to start making a kind of trading journal, even though I don't necessarily trade, day trade. I do trade swings and momentum swings and stuff like that. And so it's important to I listened to Ray Dalio the other day. And he said something along the lines of write down your criteria for making all of your decisions. So that's what I plan on beginning to do so that I can analyze all of my decisions. And I think that will not only help me continue to improve, but it'll also help you guys kind of get more of a feel for what I'm thinking about crypto, what's a really good strategy to use in this time, and where it is that we could be, going. And a big part of that is managing your emotions as well. And I think documenting that so we can see what it feels like to be in certain periods of the market cycle would be extremely interesting as well. Another thing that I really wanted to get across here is that, obviously with the bigger layer 2s or layer 1s going down in value, you're going to be losing liquidity. So right here we see the gaps between everything just increasing a lot because they're all losing a lot of TVL. I mean, we can have your pick, right? In the last day, most of these are red. And the same goes for the past weeks. So value is being sucked out of these protocols. And so obviously the smaller microcap coins are going to be having value sucked out of them as well. My strategy right now is just to like continue to accumulate the big ones, right? Ethereum, Terra, uh I want to accumulate more near, and I want to accumulate more phantom. And all I'm doing is literally putting these tokens into liquidity pools. And, you know, of course I have some degen like liquidity pools with really crappy tokens that like are yielding a super large amount every day. And so I take that money and I just split it and basically auto compound the big boys, and then split whatever residual income I get from these other smaller tokens and just shoot it right back into there. So I'm like double compounding my big bags that I want to hold on to for a long time and use as liquidity. And it's beautiful, right? So this is kind of how you have to think. Like, do you really want to be taking the risky plays without having a confirmation for what it is that you're going to like see coming down the line? Because when we do start taking off, like, you're gonna know, okay? And that's when you want to get into like these smaller micro cap coins. You don't want like your your capital to just be getting bled away, while you certainly have the opportunity to at least build bigger and better positions in solid coins, right? It's basically like saying, oh, um, buy more Apple stock, type of thing, right? Buy more Amazon. These things go up over time because they are the big boys who like generate revenue. Um, and that's kind of like what I'm thinking about right now. Just wait for the confirmation to get into uh, riskier things if that's what you're looking at. Because we certainly haven't had it yet. that is that is the for sure thing, is that we certainly have not had any kind of confirmation yet that this is over with. Look, I mean, like, we just hold steady, dump, hold steady. Now we're starting to dump a little bit again. We'll see how far down we go. But with that said, I'm gonna wrap this up right here. Um, this is kind of the format that I'm gonna go, like a week in review for crypto every single week until I'm able to like start pumping stuff out a little bit more. I'm also gonna do some protocol reviews for you guys, stuff that I really like besides Aurora. But honestly, I'm still like using the crap out of Aurora because all the gas fees are free, and that's like super important to somebody who's trying to farm and just like build bags. So I hope you guys have a wonderful week. Thank you for watching my video. If you haven't already, hit the like button, hit the subscribe button, and let's continue to grow together. Woo!